Marty. As Marty mentioned, I'm definitely not Monica James. She is my manager. I guess those are the joys of having two major airlines in Canada. She's stuck in Edmonton until later this evening, so I'm going to do my best to fumble my way through this. I have a deck of questions here that I'm going to pose to these two gentlemen here, but I'm going to go off script here and ask them a couple questions that weren't in the prep, and then I think we're going to try to leave 5-10 minutes at the end to open it up for questions. So if you have anything burning, please note it down, and we'll try to get to you at the end of the session. So I guess I'll kick it off here, and I'll start with my two questions, maybe to try get to know Dean and Booker a little bit more for the crowd. So, and they're kind of fun too. So if there's one person in history you could meet, who would that be and why? Dean.
I'll answer that one. Booker beat me to the draw here. He wore his sash, and I forgot my sash, but Louis Riel would be an interesting character to sit down and have a discussion with, given the fact that he stood up for Indigenous people's rights. We've heard about it, but kind of the Métis are an interesting group because we have a First Nations ancestry, but we also have a European ancestry. And it's interesting in terms of how they were able to kind of be that kind of go-between within the fur trade. But to get Riel's perspective on, what is the reconciliation and how does the government of Canada relate to Indigenous people, right? And that was kind of one of the modus operandi of Riel, right? So when we look at it, I would look at having good discussions with Riel about his thoughts and how would he have seen it. Another interesting character might have been Chief Poundmaker as well. Standing up for the rights, right? When a lot of people didn't stand up for the rights of Indigenous people. So those would be the two characters in history that I would like to sit down and have a discussion with.
Great answer. I actually did not give him these questions in advance. Booker.
He did not give us these questions in advance. Well, that's a good thought. I've got my Louis Riel socks on, actually. Yeah. Notice that. They're real deadly. You get it? So you took Louis Riel. I would go with Gabriel Dumont. Actually, Gabriel Dumont's actually in my family tree. He's a great uncle, I think, and I think it would be really interesting to get the thought process of some of those early Métis leaders that were, like they were leading by putting their lives on the line, and there was bullets being shot at them, and I'd really like to get the mindset of just how they were and how they viewed just what they were fighting for, willing to give their lives for back then. So I think that would be a really interesting one.
We'll leave it at that. I got one more, and I'll answer this one myself too. So as a child, what did you want to be when you grew up? I wanted to be a professional football player or a stay-at-home son, and neither of them worked out here. So here I am. So I'll go with you, Booker, on this one. Unless you wanted to be a banker, of course, that's always good too.
Well, it's hard to believe being a banker wasn't at the top of my young, 6 or 8 or 10-year-old Booker's list. No, it wasn't. A pilot. That's what I was. My grandfather was a pilot, and he flew his own planes, and he was a farmer and he's crop sprayed, and so I really looked up to that. And turns out being about 6'5" doesn't really lend well to fitting into many airplanes, and so that, anyways, that and other realities didn't work out. But yeah, flying airplanes around is what I always wanted to do when I was a kid.
Dean?
I'm going to take a slightly different twist on this, and you'll find I'm kind of a divergent thinker. I can remember in high school, I was the first one in my family who went to university, right? So nobody made it past grade 10. And I had a high school buddy who said said to me, because I used the backyard cars, so I'd buy cars and fix them up and sell them. I still do that, by the way. But he said, what do you want to be, an auto body guy for all your life? Sorry if there's any auto body guys here, but I still backyard cars. But it made me think about changing the narrative of your life. And so nobody in my family had been to university. I was the first one that went to university. And it fundamentally changed. Education, in my mind, is the great equalizer. So the internet has become an equalizer, but education's an equalizer. And so when you think about it, if we can change the narrative of getting higher graduation rates up for Indigenous people, thinking about how we rethink education, and change it so that we can change the narrative. And if you change the narrative, then economic participation becomes much easier. We can think about the businesses that we create, engineers who can run, and technology people who can run the businesses. That I think is something that can fundamentally change the world. And it's not just here, it's everywhere you go around the world, you see exactly the same things.
Thanks, guys. Thanks for being good sports. We'll get into the questions now on innovative financing. And Dean, we'll go to you first. And I mean, your company, the Innovation Federal Credit Union, is a presenting sponsor here today. And could you tell us a little bit more about yourself, your organization, and why it's important for your company to be a part of an event like this?
Okay. Innovation Federal Credit Union, I'm going to start with there, and then I can kind of mix that with my background. Innovation Federal Credit Union, so let's start first and foremost with the credit union. What is a credit union? A lot of people might know, might not know. A credit union is a member-owned organization. And as a member-owned organization, the member is the customer, but the member is also the owner. And so as membership evolves, it's actually participation within the organization from both voting, so a member votes. So all our board of directors are elected, so it's democratically controlled, it's member-owned. And that becomes important because then the decisions of the organization fundamentally are driven by the membership, right? So if the member elects people, the elected people have to manage the organization consistent with what the membership is looking for. So that becomes important because as part of that membership, it's a cooperative. And so if you think about a cooperative, there are cooperative principles, member-owned, democratically elected individuals. Those are all kind of fundamental principles. But there's two other fundamental principles, right, that come out of that. One is member economic participation. So the profits of a credit union actually go back to the owners of the credit union, which is the members of the credit union. So Innovation Credit Union, Federal Credit Union, we take 15% of pre-tax profits and we give them back to the membership. That's different. Another component of it is concern for the community. And when you think about concern for the community, it's about a community-based approach and a community-based thinking about how we develop, how we work with communities, because those communities are part and parcel of who Innovation Credit Union is. And we take 2 to 4% of pre-tax profit as well and give it back to the communities in which we operate. If you were a caring company in Canada and you got that caring company designation, you only have to do 1% of pre-tax profit. So we go well and above that. And if you think about community-minded, we talked earlier, some of the people mentioned capacity building. We talk about communities and capacity building within communities. That's one of the things that innovation really has, let's say, core to its ethos is how do you build communities and how do you build the capacity within communities? And we'll talk about it when you finance things. And it's very much and very similar to kind of an Indigenous thinking in terms of community-minded. We talk about equity and meaningful participation in the economics. So why is funding or sponsoring this? It's so close to our belief systems and our value system that it wasn't even a second thought when Marty approached us. We said, yeah, we got to be part and parcel of what's going on here.
Thanks.
I avoided talking about myself, but that's okay.
I think I do want to ask one question. As you note in the agenda there, your title is Chief Disruption Officer, and maybe talk a little bit about what that means, because it's not a title you see very, very often.
In my role, I oversee consumer banking, but I also oversee marketing, and I oversee analytics, AI, or machine learning, anything that deals with analytics. But I also oversee the digital and technology sides of the company. And so I have that kind of business mindset and technology mindset, and then how do the two merge together? And so that's my role, is to kind of bring it together. In fact, in 1988, I did a Master's of Science in Technology Management, and I was the only student. So I took classes in the engineering side and the business side, but it was kind of unique. But as it's kind of evolved 25 years later, or no, more than that. Yeah, it's a good 25 years later. No, 35 probably.
We'll stick with 25.
Yeah, okay. Math wasn't my greater suit, right? But anyway, it was a different way of looking at the world, and to this day, that's kind of my role. But I also had the Indigenous relations group within our company. And we didn't set it up as Innovation Federal Credit Union Aboriginal Banking. We said, no, that's a wrong approach. The approach is it has to be, and it has to permeate throughout the entire organization. So it can't be a section of the organization that's thinking about it. It's got to be the entire organization. And so at Innovation, all our directors have went through Indigenous training. They've done the blanket exercise. Our executive have done it, and it's permeated all the way through the organization, that it's part and parcel of our whole organization. It can't be a subset of the organization. And so we're trying to make sure that every aspect of our business considers Indigenous worldviews and Indigenous participation.
Thank you, Dan. Booker, you want to give us a little bit about yourself and First Nations Bank of Canada?
Love to. Yeah. So about Booker first. So I've got a banking career that's spanned about 20 years. Most of that's been in commercial banking, and I'm relatively new to First Nations Bank and the Indigenous banking side. About 2.5 years that I've been with First Nations Bank. Prior to that, it's mostly just commercial banking, and the area I worked largest in was large real estate development projects. I enjoyed it. It was a good area. It was really interesting. I got to work on some projects that were in the $60 to $80 million range. I had some awesome clients that I worked with. But by and large, those clients were, they were they kind of fell into a very narrow group. They were, rich, nice guys, older white guys. And a successful project with one of those, clients, again, I liked them. There wasn't anything wrong with them. They're very nice people. But, that successful project meant that, that older rich white guy, his 4 or 5 year old Porsche at a Scottsdale condo in Arizona, like he could get a new one. And that was literally what a successful project meant. It didn't really make the difference in people's lives or, anything like that. With First Nations Bank, when there's a successful project that I finance, it really does. Like, it means that, a community is creating not just jobs, but like quality career type opportunities for 20, 30, 50 nation members. And then that directly impacts, 300 or 400 people. Like, it's just, and it's literally making the difference in people's lives, and significant difference. And that's, that's the difference between my earlier career and what I'm doing now. First Nations Bank, we've got some similarities with my other panelist here. How many people are from a Saskatchewan-based First Nation here in the room? So every one of you indirectly is actually an owner of First Nations Bank. We're owned by 85 First Nations across Canada, and pretty much every First Nation in Saskatchewan is a shareholder of First Nations Bank. We got started in 1996, and back then, just most of the big banks weren't terribly interested in lending to First Nations, getting a loan for on reserve infrastructure or anything like that. The banks just kind of threw up their hands and said, Indian Act, we can't help you. And and it wasn't quite true, but it you know, it was just a little more work than they wanted to do, and it just wasn't that attractive of business. Things have changed. Every bank has an Indigenous lending division now. You know, there's a lot more people interested in that space, but for most of the banks out there, whatnot, Indigenous lending makes up, you know, a percent of what they do overall. For First Nations Bank, it's basically all we do. You know, it's why we exist. It's our bread and butter. 65% of our staff are Indigenous, and you know, that's just our sole focus. We're one of the only FIs in Canada that has zero interest in financing Joe White guy owned hotel in downtown Toronto. If that's owned by an Indigenous group in, you know, north of 60, we're all over it. And you know, that's, well, we're the only ones that are going to probably look at it that way for the most part.
Good. I think something you both talked about, maybe we can dig into it a little bit more, is who your shareholders are as a credit union and a First Nations owned bank. I mean, that's of course a lot different than the other big banks in Canada. I mean, large publicly traded company where anyone in this room can go buy shares in that company. And so with the credit union and with the First Nations Bank, how does that change your approach to the Indigenous market opposed to the larger big banks because of who your shareholders are?
Do you want me to
Sure.
start?
Give it.
Okay. Well, one of the things is, like in our cooperative principles, one of the ones I talked about was concern for the community, but the other one is cooperation amongst cooperatives. And so we're doing expansion in the north right now. So we were the only ones north of Meadow Lake. We were the only ones that had we call them advice centers, but a branch north of Meadow Lake. And we've had it there for forever in Buffalo Narrows. But we've just recently signed an agreement with Ilocos Cooperative Association, so we're putting a micro advice center inside the co-op within that community. That community has about 2,500 people, 1,500, but 2,500 when you consider surrounding area. We're also in discussions right now in La Loche. That's a community of about 3,500. But if you consider all the surrounding areas, the Dene Nations around, you're talking, a population of 5,000 to 6,000. If you look at just what's the right thing to do, and this gets back to concern for the community, right? And if you think about doing it, we're going up there because it's part of the concern for the community. So why should somebody from La Loche have to drive an hour and 15 minutes to get to Buffalo Narrows, which is the closest branch, but that Buffalo Narrows is 3 hours north of Meadow Lake. Why would they have to drive that far to get access to financial services? And so the answer is they shouldn't. And so we're looking for innovative ways to provide financial services within those communities. We have what's called a mobile advice center. It's actually a branch on wheels. And so we have it up in Ilocos right now, but the intent is to go to the different First Nations communities and basically provide financial services so you can do in-person financial services 1 day a week. But we're thinking of the community and how we can serve the people of those communities, and it's a much different approach. So when you think about it, it's all about the community and partnerships and working with the organizations. When we went to Ilocos, as an example, one of the things we did is there's sometimes, kind of the approach of a lot of the, our competitors is kind of like white saviorism. We're going to come in and we're going to tell you how we can help you in your community. And we didn't want to get into that. So we really met with all the leaders within the community first. And we said, how can we work with your community and what are the needs of your community and how best can we set it up? So each community will have a different approach, but it's based on the community's approach, not our solution to the community, but working with the community to come up with a solution. And I heard somebody mention education earlier. That's the same thing. Like when you're up in La Loche, a lot of the let's say students from La Loche that would come south would not necessarily return, or they wouldn't complete their education to go north again. So if you look at education, social service, if you looked at healthcare, in those types of programs, what they've done is they've moved from trying to do the education at the U of S or the U of R, and now there's the U of S and the U of R have extension programs up in that community. But it's thinking about the approach, and the approach can't always be a cookie cutter approach. You got to really understand the community and the community in which you operate, and then adjust your strategies accordingly. When we think about financing, right? So in those communities, we'll work with the ECDev companies in those communities to say, okay, so what are the businesses up there? What is the assessment of the business? And then how might we finance the businesses that they're looking to develop, as opposed to coming in and trying to do, our kind of our own approach. So it's kind of what I would say is the partnership component, which is cooperation amongst cooperatives, but it's cooperation amongst communities. It's cooperation with First Nations and Métis groups. It's finding a different approach, and the solution's not always going to be the same. The solution's going to be specific to the community that we're trying to do business with.
Thanks, Dean. Booker, you want to take a stab at that one?
Absolutely. What makes us different at First Nations Bank versus the majority of our competition, and I'm referring to banks here, not credit unions, because obviously you guys are, just philosophically just completely different, is essentially doing the right thing. At the end of the day, most of the banks that are out there, all the banks that are out there for the most part, are capitalistic institutions that are designed to, at the end of the day, drive the most return for shareholders that they can, and that's just profit. That's what that means, and that's what they're built to do. And if one of them starts, not doing as good of a job, the market notices that, and one bank's stock price goes down, and they fire their CEO and bring in somebody else that tries to get it up compared to their competitors. At First Nations Bank, we don't have, we're privately held, and we're privately held by, Indigenous groups that aren't, while they have their investment in the bank to make money, like we don't go trying to do bad loans. It's not all about profit. It's more of an Indigenous worldview. Best way I can do is give you a couple examples. Where things I've seen working for First Nations Bank and with First Nations that would not exist at most of the other traditional financial institutions. We've had opportunities where we've had, First Nations that I think are actually represented in this room that have come in. They're solid groups. They need $20 million, or they need X amount of money for a project. It's a good project. It's a good loan. We're going to be able to do it. It's there won't be a problem doing it. That's a really good sale. It's good to get on the books. But where we've noticed that, hey, besides us giving you the money, there might be a better route for you and your people here. That could be in the form of grant programs. And so, if we're knowledgeable or aware of something, for a green energy program or something like that, we will point you in that direction and say, hey, go look into this. I've had that happen where a $20 million loan's turned into a $6 or $5 million loan because a group has gotten $16 million of a non-repayable grant funding that they weren't aware of before they talked to us. That was celebrated internally, like more than doing the sale, but if I was at big bank, that would be discouraged. Like it'd be shooting yourself in the foot. You've got targets, you want to drive profitability. If you can do the loan, you don't want to send them to go get a grant. You want to get the loan out the door. We work quite closely with Canadian Infrastructure Bank. If a First Nation comes to me and I know that this is what you're looking for, something I can do, but I know that CIB can lend you most of the money or all of it or a portion of it at 1% over 25 years, that doesn't exist in our world. Like in regular banking, we can't lend that low. That's way lower than our cost of funds. But we'll put you in touch with that group to help get you financing at the best that you can for your nation and your people. And we might end up only doing a third of the financing in that situation versus all of it, but it's the right thing to do. That First Nation clients aren't going to be around like a, average business that, has a owner that's 40 and that's going to be retired when he's 70 and it won't exist anymore. That First Nation is going to be around in 300 years and 7 generations, and First Nations Bank will as well. And we'll have lots of opportunity to make money, work with that group over the next project and the next project. And that's the view we take. And it's not just all about the sales we're going to get this quarter. And I think we kind of try and prove out that we can be, we're as much of a partner for our clients as we are just the place they go to get a loan.
Perfect, thank you. I think, us as FCC, we have a similar approach to, we're supporting the market, and because of who our shareholder is, it's a federal government, Crown Corporation is in agriculture is all we do. The primary production as well as anything before or after the farm on the commercial corporate side of the world. Just a quick example. I had a customer, who didn't farm. They got into farming at a fairly large scale, we'll say around 5,000 acres. And the financing that had to go along with that. And the question came, is there any programs out there that you know of that we may be able to access? So connected them with a couple contacts of mine, and they were able to get a fairly large chunk of money for interest-free over a period of time, which, I think the customer really appreciated. Of course, we could have said, hey, we will do that, but, knowing the market and knowing who's out there and possible, low interest or grant money that's out there, that's always an added bonus to the customer. So we'll get into a little bit about the market itself now, and the trends, and we'll start with you, Booker, and what are any current trends that you're seeing in the market as it relates to economic development or emerging for First Nations or Métis in the province or in the prairies?
Yeah, what I think the biggest change that we've seen has been, everything's about equity now. It used to be impact benefit agreement. That was, that's all there was. Those still have their place in certain situations, but equity kind of seems to be the starting conversation. And there's a lot of really amazing things that are happening, in Saskatchewan, Alberta, in Canada, where there's Indigenous equity ownership opportunities and programs and things that are, allowing First Nations to step up with meaningful, ownership of, these opportunities, not just, being there, getting some jobs, having, some sponsorship, but actually getting to take part in, the next 20, 30, 50, 100 years of revenue and income from a, equity ownership standpoint. So, that's really exciting. And then just the scale of the projects and opportunities, right here in Saskatchewan, there are some First Nations that have some 10 megawatt projects, and that was kind of, I don't know if that was just SaskPower dipping their toe, but there's no more 10 megawatt projects. We're not going to get to net zero with 10 megawatt. It's going to be 100 megawatt or larger, and those are massive, massive projects, and the scale and scope of them is huge. And so there's really big opportunities, and there's probably not one First Nation that can necessarily take advantage and play super meaningful, ownership in projects that large. So, there's situations where First Nations are having to, potentially look to work together, to take part and have opportunities in some of these projects. And so, yeah, those are, there's a lot of exciting things happening and a lot of opportunity.
Dean, anything from your perspective?
Yeah, I could give you a standard answer of, what's happening in terms of trends. Well, you got increased competition, you got fintechs, you've got, technology constantly evolving and so on. But I'm going to take a different kind of perspective. And that is this, with the world, things constantly change. And it doesn't mean that the old is going to go away, but the new occurs, and there's going to be new opportunities. And just by a show of hands here, who knows the song that says the video killed the radio star? How many of that, right? Well, if you think about from a media point of view, right, that you have, radio is still around, and it's existed a long time, right? And then from the radio, you move into, television, and then from television, it's into video, the internet, et cetera, right? So you ask yourselves, did video kill the radio star The answer is no. But what happens in terms of the environment and as new opportunities emerge, so as we heard the panelists speak earlier, there's still going to be some traditional energy sources, right? So when you tie it back to carbon, you're going to have new opportunities in wind and solar, and then there's even hydro, capacities, and then you think about turbines, within, let's say, ocean currents, et cetera. There's going to be new opportunities that evolve, and really I think what it's going to happen is it's fundamentally changing in what you'll finance and what the opportunities will be. And so it's a matter of seeing these trends, but I think the big thing is where do First Nations and where do Indigenous entrepreneurs fit in? Because I think we want to look at the Indigenous entrepreneur as well. Is to where you see the opportunities and then financing them. I think that's one significant change that's going to occur in the trend. A second significant change is the transition of ownership, right? So you have a lot of individuals who are getting 50, 60, 70, and they have businesses and they want to transition those businesses. Who are they transitioning those businesses to? And it's a matter of getting in the door, looking at the opportunities and saying, this is a business I should buy in to, maybe this is one that I don't want to get into because it's trending down. And so when we think about economic participation in equity, then it's financing the sale of businesses or financing the buying of businesses. That's a new area that's going to kind of evolve. And it's thinking about that because fundamentally financial institutions are financing the cash flow of those operations. They're not necessarily financing a solid asset, right? The equity, the security you have is the equity in the company, which then owns all the assets within the company. Sometimes they're asset sales, so you can finance the asset sales. That's a trend that's emerging. But here's one that's on the horizon that everybody should be thinking about. With the regulatory environment that's occurring, particularly federal, but it also get down into provincial regulations, is the reporting on carbon footprint. And so financial institutions have an obligation to report on the carbon footprint of their own institution, but eventually it's moving to the carbon footprint of all the people they finance. And so when we think about this carbon neutral, there's pressure on the financial institutions to then be able to track this. Now, why does it become important? We lend on risk and return, right? So you get you look at the return, you can find the returns, but the risk side starts to come into impact in terms of which ones are at greater risk and how does that risk impact your return? And so it's coming down the pipe. In 2024, all the larger banks are going to have to report on their carbon footprint, and eventually they're going to have to report on the carbon footprint of their customers. And for smaller institutions like First Nations Bank and ourselves, it's 2025. And we have to be thinking about this because carbon's going to become a lot more real because that'll be part of our risk assessment in terms of how we assess the risk of an entity and its survival and its cash flow generating capability moving forward. And so this becomes really real pretty quick.
Oh, do we got a question back there?
I'm just going to jump. Can you hear me? Mic's not working. Is it working now?
Yeah.
Yeah.
Can you hear me? Okay. Neil Dobson, Carbon RX. In the spirit of Dean, of the response you just gave, or the commentary on the carbon economy that we're now a part of, as you think about own source revenue and you think about nations being able to monetize carbon credits, help us understand the financing piece that potentially comes with that own source revenue to the nation.
You want to go?
Absolutely, yeah. No, so everybody in this room knows, there's lots of representatives from First Nations in Saskatchewan. What got a lot of First Nations started was SIGA, casino right next door. Those gaming revenues. We've taken part in helping so many First Nations get their first ECDEV started based on, or community infrastructure based on gaming revenues, and those nations being able to sign those and have those own source revenues. So this is another form of, once this gets proven out and a nation can say, hey, we've got this, carbon stream of revenue based on, our land and carbon credits, and we can show that annually we have this much, sustainable, consistent revenue. Absolutely, a nation can leverage that to go and, do whatever they want, whether that's a community center, whether that's housing, whether that's, an economic development opportunity. That's something that can tangibly finance, and allow that. Even that might just be a few $100,000 a year, but it could potentially mean that they could utilize that to access millions of dollars of capital, and that can make huge difference to nations. And then that just keeps on rolling because they might invest in an opportunity that is supported by that. 3 years later, that's self-sustaining, and you're using it for the second idea or the third idea, and that's what makes a difference and helps nations become self-sustaining.
Great response.
I think maybe building a little bit on that, Booker, when a First Nation comes to you with a project, from your perspective, what are the key elements that you're looking at in any project, whether it be carbon, infrastructure, agriculture?
Essentially, as a bank, we, how's it going to get paid for? That's the key. We can't lend if we don't know how it's going to get paid for. Whether that's funds from ISC, whether that's own source revenue, where's that money coming from? And so, this example of, what we're talking about, if there's a carbon stream, that could form one of those things. That's the biggest aspect for us. Then it really depends on the type of opportunity, the security that's there and or not. Is it on reserve, off reserve? But it's the key thing is how's it going to get paid for? That's kind of the first thing we look for.
Yeah. One of the things that I think about is this. When you have a revenue stream, how do you create wealth? Well, you leverage the revenue stream you have, you leverage it into other opportunities, right? So if you receive a revenue stream and then you spend it all, then what ends up happening is you don't have the capacity to reinvest to create new revenue streams, right? So I think it's a matter sometimes of sitting down and saying, how best can you leverage the revenue stream that you have to make, let's say, vital investments in the future, not only just within the community itself, but leveraging it for further economic development, right? And so one revenue stream creates another revenue stream, which creates another revenue stream. That's what gets you ahead in the game, right? And so you want to be thinking about how you do it. As a financial institution, we can, just like when we, let's say, lend to, let's say inventory as an example, right? The inventory is there, but it hasn't generated any revenue yet. But then you could take the money that's invested in the inventory, or you've, let's say, borrowed off the inventory to leverage it to do something else. So it's just a matter of saying, how can I get money quicker today to generate new revenue sources that are actually going to contribute to future kind of economic thinking, right? And economic development. So I think it's about how do you leverage the resources that you have to be able to make more so that you can eventually contribute back to the communities in which you operate or the communities in which you're in charge of. So to me, it would be partnering, and this is where I think a financial institution comes in. It's not just about the deal, it's about what you're going to do with the deal and how to think through the deal so that you can get even more benefit out of the deal, right? And I'm just going to share with you really quick. When I was, I worked overseas as well. And when I was in China, there was a story in the South China Morning Post. So I lived in Hong Kong. And there was a story in the South China Morning Post. And it was Li Ka-shing. And I don't know how many people know Li Ka-shing, but he owned the Cheung Kong Group. It was a huge property development. He's worth billions. He's a billionaire. He bought Husky Energy, Husky Oil, so that his son could move to Canada and run it, right? So he bought a whole company for his son to run. But they asked him, what's the key to your success? And he said this, if a reasonable rate of return on a deal is 10%, and you can squeeze your partner for 11, accept 9, and you'll get 100 more deals come your way, right? And that's kind of important in terms of partnering, is if it's a win-win, then everybody benefits, and more deals come their way. And this is what when I think about it, that's what a financial institution needs to be about, is understanding the needs, understanding how we can partner so that we can do not just one deal, but we can do 100 deals together, right? And to me, that's what's really important, and that's how you have to think about the relationship. So, I mean, if you had a piece of advice, I don't know if that's on there, but my thing is, think partnering and think about working together is the key, I think, to, you can cut through. Every deal's a deal, everything has return, everything has risk. The real thing you need to be thinking about and building the economic development opportunities is to think about partnering. Find the right partner and work with that partner, and it's a two-way street. Partnership is not one way, partnership is two-way.
Thank you, Dean. And I think with that, we'll wrap it up. Marty's given me the old cut it off. We did have a couple more questions, but thanks, Dean and Booker, for spending 50 minutes with me, and hopefully I did all right pitching in to Monica.